Good evening, everybody. We're getting into the fun part of uh, this section. Um, we get into the fun part of the section where you guys are going to learn about futures. This is not anything crazy. This is just an introduction. Okay, there's more for you to learn. So I suggest you pay attention to these, to what I'm gonna teach you today, and you kind of understand the concept and why we trade futures and why we trade futures and how trading futures instead of actually buying the actual crypto is going to be beneficial for you. Okay, so what we're gonna talk about today, we're gonna talk about some takeaways, some key points that we're going to mention. You know, I'm gonna tell you what is crypto futures trading, why trading crypto futures, why do you want to trade, and I'm going to give you 5 steps to get started in crypto futures. 5 things that I come up with. I think they're going to be key to success in trading. It's not just crypto futures, it's trading in general. You might have a class like this again when we get to the option part. Then we're gonna talk about finding a trading methodology, something that works for you. Um, um, Develop a trading plan. If you are trading, you need a plan. You can't just yes, this is an English class. The Korean one will be tomorrow with either me or Podax. Okay, so develop a trading plan and use proper risk management. And trading responsibly. Don't go overboard when you trade. And then we want to talk about continuous education as far as keep learning, get the news, etc. Right? Some takeaway from this class, right? So crypto futures allow investors to speculate on the future value of the cryptocurrency. For instance, participant can either go long, anticipating on the price going up, or go short if anticipate a drop. So when you trade crypto, you have 2 ways you can go. You can either go long, or you can either go short. When you go long, you think the crypto is gonna go up. When you go short, you think the crypto is gonna go down. So investing in cryptocurrency, okay? Investing in cryptocurrency future and investing in cryptocurrency futures offers more opportunities and potential to grow a portfolio. So this is just like trading options for those of you already know how to trade option. Some people use crypto futures in option as leverage. What I mean by leverage is when the market is down, when we're in the bear market, they decided to go short. Okay, so that means they making more money for their portfolio. So when the bull market start again, so they could use that money to reinvest. Some people do it just for that. Another reason to participate in futures contract is hedging. Crypto can protect portfolio and serve as a hedge for investment trending in the wrong direction. Okay. You can see I mentioned this a lot, hedging a portfolio. Okay. So when you hedge a portfolio, is literally you going the opposite direction of what you're already in. So if you were on a long position on your spot trading on your crypto, so now we're in the bear market and you go short. It's pretty simple. Now, what is crypto futures trading? What is crypto futures trading? Crypto futures trading is different from spot trading in many, many, many ways. Spot trading, okay, for those of you who does not know what spot trading is when you actually buying a crypto, okay, you buy it and wait for it to grow and for it to make money. Firstly, crypto futures trade don't require you to directly purchase or sell, purchase, sell, or hold any crypto assets. So when you trade crypto futures, you are trading. You do not hold a position. You do not hold the actual asset. So for example, you see how you have your Shiba. If you buy Shiba, you're able to transfer that Shiba to different places. Crypto futures is not like that. You are trading it for the sole purpose of making money. You're wagering, right? You're making speculation on whether something is gonna go up or it's gonna go down. Okay, so you're looking to buy or sell futures contract, representing a cryptocurrency's value in the future. Okay, so you predicting whether it's gonna go up or it's going to go down. This is all you that you're doing, which is completely different from buying the actual asset. Crypto futures allow investors to speculate on futures value of cryptocurrency. For instance, participant can either go long, they get asked that before, if anticipate on the price increase, or go short if anticipate on a drop. You see how I'm mentioning this many times. So if I ask you a question on the test and I said, okay, if I'm going long, what am I doing? So if you're going long, you're buying, okay? You're buying something. That means you think the price is going to go up. If you're shorting, okay, you're gonna see the word short so many times, especially in crypto. When you are trading, you have to understand what the word short is. Just like with the stock market, you can short. With crypto, you can short as well. When you short, you anticipate the price is gonna drop, it's gonna go down. Okay. One of the critical benefits of crypto futures is the use of leverage. Okay, leverage allows for better capital efficiency, as traders do not have to lock up entire amount of capital. So for example, if I have $1,000 in my portfolio, if I want to enter a trade, I do not need to put my whole $1,000 in there. So if I really want to trade for $1,000, what I can do is I can put $100 and use a leverage of 10x. That gives me $1,000 in that trade. Or I could put $250 and use a leverage, $250 and use a leverage of 4. That gives me $1,000 in the trade. So when you are leveraging, when you are doing a leverage on crypto, you are borrowing money, okay, from the exchange to enter that trade. Now keep in mind, this is a risky position. So when you leverage, if you go for $1,000, right? If you go for $1,000, and if you have $1,000 and you do a leverage of 10x, so that means you have $10,000 on that trade. Now, the moment you are losing, $1,000, that's the moment they will go ahead and cancel that trade out, and then they'll liquidate you. Okay, we'll talk more about liquidate and stuff like that in future classes. Okay, so again, when you trade futures, you could use what we call leverage. People gonna compare leverage to margin. It is somewhat the same thing, but not really the same thing. Okay, because there is a reason why they use different name forms. So you could use leverage or you could use margin. Leverage offers the chance to use future trades as a defensive hedge for portfolios. If an asset were to perform poorly or the opposite of what is speculated, future trade hedge against this outcome will compensate for the loss. For example, you buy some Shiba, and then let's say Shiba were to be $1. You buy Shiba at $1, and Shiba is going up. Now Shiba is going down. Now, since you know that we're in the bear market, but you own some Shiba, so your money is decreasing. Okay, your money is decreasing on Shiba. So what you can do, you could go short on Shiba on trading futures, and you make more money to reinvest in your portfolio, or you could use it to pay your bills. There are people, there was a guy that joined, there was a guy that joined Boulpik a few months ago, and then he was a truck driver. Now he tell me all he do now is just trade futures, and he used that money. He put about 10,000. He put about $10,000 on his crypto futures, bought it up to 50,000. Now he has $50,000 on his account. Keep in mind, he joined Boulpik 4 months ago. He has $10,000 on his thing. Then $50,000 now, and then he take out pretty much about $2,000 to $3,000 a week just so he could pay his bill. That's all he do now. He just trade. So you could not only use that as a hedge, you could use that to make your everyday money. Okay, why trade crypto futures? Trading cryptocurrency offers trading crypto futures offers more opportunities and potential to grow a portfolio. Simply put, the leverage available in futures trade can easily enhance a portfolio with a single trade. So on a single trade, you can enhance your portfolio. Okay, you could have, let's say you have $10,000 on it, and you have $1,000 in the trade with a 10x, and then your portfolio is $10,000. Okay, your portfolio is $10,000, and but you have $1,000 on your futures trading. You go 10x, so that means you have $10,000 in this trade. If you make 100% of that trade, that means you make $10,000. So you could use that and reinvest it and pay your bill and do what you gotta do. So another reason to anticipate and to participate in futures contract is hedging. As mentioned earlier, protecting a portfolio can be challenging, especially with cryptocurrency. A strong line of defense for any portfolio is a futures contract. They can serve as hedge when investment are trending in the wrong direction. Again, you could use it as a hedge. Unlike spot trading that benefits the investors when the price is trending upward, futures trading can profit even when the price is falling. Regardless we're in the bear market, regardless we're in the bull market, you can always make money. That's what same thing with the stock market. Okay, you can always make money, especially if you are trading futures. The ability to short or long an asset offers more fluidity to investors, as well as freedom to speculate on what the short-term outcome will be. So unlike certain crypto where when you, especially when you spot trade, where you're only able to buy low, sell high. On when you do crypto futures, you could do both. You could short, you could long, you could do pretty much whatever you want. Whatever direction you think the crypto is going, you can go in that direction. Now, I create a 5-step, guideline. The 5 steps guideline that is very, very, very important. Okay, the 5 steps to get started in crypto futures. It's only 5 things you have to remember. Okay, trading is challenge is, again, like I said, it's very challenging. So it will take it will take a lot of work. It's a lot of information. So you have to be able to stay connected. Okay, you have to stay connected. Now, the first step is finding a trading method. Finding a trading method. So finding a trading method is more than just replicating a highly profitable strategy that was found on YouTube or social media. Not just because you see someone is doing something and then you start doing it. It's more than that. Okay, right? A trading method that works has to be personalized, fit to your character trait, lifestyle, risk tolerance, and long-term objective. To find the optimal fit for yourself, follow these points. So, like, if you are trading, you can't use my method and trying to. You could use my method and fit it into yours and tweak some things here and there, but you can't use what I use as a method to say that's what I'm going to use. No, you got to personalize it. No, you got to know your risk management. You got to know your goal. Because if I have, $100,000 I'm trading and you have $1,000, it's different. If I have $100,000 and I could put $10,000 on every trade that I got in, I'm okay with 1 to 10%, with 1%. I'm okay with 1% profit. But if you make a trade, if you get into a trade and you have $1,000, 1% is not enough. So you, again, like I said, you gotta do what fits your profile. Identify your personality. When I say personality, know what goal you have, how much money you're starting with, and stuff like that. Determine your risk tolerance and long-term financial goals. Know where you want to be. If you start with $1,000, you say my goal is to make it, to that, $100,000 in a year. You got to stick to that. You have to stick to that, right? And you have to stick to that and work and put every trade you have to record that somewhere. Make sure that you stick to that and follow the direction. Define trade parameters that could match your personality. Whether personality, you like to go short, you like to go long. You know, you don't use stop loss. You only use 5% stop loss. You only use 10% stop loss. Yeah, when you trade, you use, you know, you like to do support and resistance. You like to use the chart. You like to go with the news. You got to find something that works for you. Okay. You know, so you're gonna evaluate, you know, each one, because you're not gonna find one that works for you right away. So you got to do multiple and see which one works for you better. Make adjustment if you experience problem. So if you start something, if it doesn't fix, don't. If it doesn't break, don't fix it. So if it's not broken, don't fix it, right? So if it's not working, then by all means, you know, change it. But if it works, keep it. The number two, you gotta develop a plan. You know, a trading plan can help you manage risk better and help improve trading consistency. When developing a trading plan, you must include the detailed layout of how you will enter exit positions, include entry, exit indicators, position sizing, stop loss placement. This is very, 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 very important. Okay, this is very important. So if you have $1,000, the goal is for you not to make it to double that tomorrow. Not saying it's impossible, but not saying, but it's gonna be hard to do. So you gotta know how much you wanna get in. You gotta know, you gotta, okay, I have $1,000. I wanna take 25% of that on every trade, right? Okay, I wanna go long. I wanna put a 5%, you know, a 25% stop loss. If I'm down 25%, I'm cutting my loss. Or if I'm down, you know, you're looking at the chart. If I'm down based on where, you know, where I see that the candles are going, the way the chart is, you know, I'm getting down if you break this. You know, I'm taking 10% profit. I'm taking 15% profit. You know, you gotta say, if I make my goal, okay, if I make my goal is to make $100 today. If I make my $100 or more, I'm done. I'm not gonna force any other trade. I'm done for the day. Okay, you know, discipline. You know, trading plan that's also into discipline. The advantages of having a trading strategy are numerous, of ranging from lowering stress throughout. Right now, I'm having a stress, you know, on trade that I take that I lose money on, where I didn't really have to take it. You know, it happened. You know, to, you know, becoming more conscious of your trading habits, you know, which help you make, you know, highly targeted development and trading seriously. So you got to take trading seriously. You got to take this as a business. It's not like, you know, you just do it and just to do it. Okay, you got to do it as a business and take it seriously, because you could make serious money with this. I don't remember. I don't know if you guys seen it. I was doing, you know, this 2% rule that I created, where you only make 2% of your total account per day. $1,000 can turn into $1 million in a year. It's not impossible. You could take $1,000 and turn it into $1 million in a year if you trade every day and you're able to make that 2% of your winning daily by following your rules. Okay, it's not impossible. Okay. Number three, proper risk management. There are many ways to do your risk management. By, okay, if you say, I will never enter any trade no more than 10x, stay to that, no more than 10x. You know, I will always enter 5x, but if it's a great trade, I'm going to take 10x. You should have your if you have $1,000, okay, you should say, okay, I'm only using 25% of that to enter the trade. You know, in this one, I said traders should consider risk management. Risk management begins by simply setting bounds for what you deem is acceptable or unacceptable to lose in the trade. If you put 250 and you're not comfortable losing $50 in it, then put your stop loss. Once you hit 50, cut your loss and move forward. Okay, each dollar should be treated as if it worth 10x. Okay, that's my strategy. You could do it if you want. So if your account is $1,000 and you should be highly averse to losing more than $100. So if I have an account that's $1,000, okay, I don't want to lose no more than $100 per trade. That's going to be my goal. So if my account is $10,000, I don't want to lose $1,000 on a trade, right? So that's how I work. It could be for you. It could be just $50. You gotta do what you gotta do, right? You should be highly what am I? Okay, having long-term perspective like this require the trader to approach each trade with a clear strategy. So if you already know your goal, you know where you want to go. Every time you're getting in a trade, you know what strategy you're going to use to get to where you want to be. As such, winning in small doses, and then there's no need for you to win big every time. If you win $1 for every trade you make, if you make 10 trades, you make $10. Some people, it depends on where you are, $10 a day is enough for you. Okay. If you live in Haiti, you're able to make $10 a day. Okay. If you can do that every day, you make $300 a month. And some people in Haiti can live with that, right? So once you build your portfolio, then you can start making more. Or it depends on where you live. If you make $100 a day, if I can make $10 per trade, that's cool for me too. Don't be in a rush to make a lot of money on the spot. Little by little, you will make that money. Little by little, you make that money, but you have to be consistent. Don't go out here, you make 10, you make 10, you make 10, you make 10, and then you lose 200. No, that's why risk management is important. If you're making 10, you're making 10, you're making 10, you make 10, you make 10, you make 10. Next time you're losing, you should only be losing between $5 and $10. You can't be making 10, 10, 10, 10, 10, 10, and then you lose 200. That set you back, behind. So you gotta be you gotta remember that. Okay, somebody said my screen is done. Okay, so risk management strategy maintains value that protect your funds long term, allow for realistic expectation, and protect your emotion. You gotta take. I know it's hard, but emotion you gotta take that out of the equation, right? Number 4, we have trading responsibility. Emotional trading, gambling, and compulsive trading are all irrational behavior that can lead to the demise of a trading career. You can be emotional because you lose $10 and then you go and try to make that $10 right away and then lose. You can't be gambling your money like that. Okay, I'm just gonna put $10. If I win, I win. If I lose, I lose. No, it doesn't work like that. Don't make irrational behavior for you to lose money. You gotta analyze it, right? Ways to mitigate these behaviors include minimizing leverage. Don't use big leverage so you don't. So if you use a 20x, if that trade goes against you, you're probably gonna get liquidated once that trade start going against you, and then you end up keep averaging down with the lower leverage, so you don't get liquidated. Next time you use all your money, so you don't want to do that. Use and trade capacity. Don't trade all the time, right? Setting realistic goals for success, and never trade with money that you need to survive. Okay, unless you can trade professionally and with stability. If it's the money that you really need, don't trade with it. If it's the money, don't go lose it in the market. We've all done it, right? Losses can stack up quickly and can damage you psychologically just as much as a bank account. Letting losses go and avoiding lucky ones are responsible approaches to futures. So no, you take a loss, you take a loss. It's okay. We we shuffle the card and let's go at it again, right? Don't let a loss keep you from doing what you're supposed to do. No, continuous education. Something. Sometimes we have news about Bitcoin or cryptocurrency. You gotta stay up to date. What I'm trying to tell you is you gotta stay up to date with the market. Do some news search, watch videos, learn new things so you can understand what you're doing, right? So you can understand what you're doing. Always learn, always, if whether it's YouTube, whether you pay someone to teach you, but you gotta always keep learning and keep up to date with new information that coming out every day. That can help you. Now, how do you start trading? If you have not already, places you can start, platforms you can use to trade future, KuCoin, FTX.com, Binance.com, Bybit, LBank, Get.io, and Mexi. I put FTX.com and Binance.com because they have FTX.us and Binance.us where you're not able to trade futures. KuCoin is what I use, but some people can use, you could use FTX, you could use Binance, you could use Bybit, you could use LBank, you could Get.io, you could use Mexi. So any one of those, if you don't have them, my suggestion is whatever you can use, especially KuCoin. If in the US, you should be able to use KuCoin and Bybit, but Bybit you need and Mexi. Bybit you need VPN. If you outside of the US, you could use any one of these, right? You could use any one of these. So apply to get a proof of futures contract, deposit your money, and you're ready to trade futures. So I'm going to take some questions. Okay, so any type of question you have, keep it basic, raise your hand, and I'm going to take some questions, and then I'll give you guys a homework to do. Today's class is not long at all. So this is just the introduction. The stuff are coming where you're going to learn how to do these things. They are coming. We're gonna take Fanny. Go ahead, Fanny.
Yeah, I think you answered my question at the end. You said when you said deposit your money. So I was going to ask you, like, if I want to start my portfolio, let's say I have like $2,000, like I would deposit $2,000 just to start my portfolio and start trading, right?
Yes.
Okay.
Let's take Jean P.
Hi, how you doing, guys?
I'm doing good. How you doing?
Not bad. Edgar, Jean-Pierre, GP is still the same. I don't know. And my question is about the 5 things we have to do about when you get in a position. About do we have to know all 5 before we get in the position? That's mean the first one, like an entry position, exit position size, about the percentage of loss and the percentage of profit. Do we have to know all 5 before we get in the position?
No, you do not need. Okay, so when you are trading, I'm trying to find what slide you was. When you are trading, right? So you need to know. Okay, so it's like it's gonna become second nature when you start doing it, right? So if you have $1,000, because it's your own risk management, right? If you have $1,000, right, you need to know if you have $1,000, you need to know, okay, I'm not gonna enter $1,000 at all in this trade. So you enter the trade. Let's say you said you started with 25%. My goal is to always use 25% of your money if you have anything under $10,000, right? And I'm sorry, anything under $25,000, you just use 25% of that money to enter any type of trade. Let's say you have $1,000. Okay, I'm going with 2,500 per trade. Okay, you get to 2,500 per trade. You don't want to go no more than 25% because you might need sometimes you might need to average down because you're gonna need money. Now, as far as your goal, you have to have a goal. You said today my goal, because this is like a job. You have to know how much you want to make in a week, how much you want to make in a month. My goal is to make $100 today. If your first trade you make $100, you should stop trading. Okay, you should stop trading. Or if you in one trade and your goal is to make $100 for the day and you only have 150, you should close that trade. forget about all the profit that you could make potentially, because you could lose that money as well. Like you get into a trade, your goal is to make 100 for the day, you're up 150. Close the trade and go on with your day, right? Stop loss. If you have a stop loss, you know, okay, I'm putting 250, but if I'm losing $100, I'm gonna get out of the trade. If I'm losing, 10% or 15% or 30% or 40% of that money, I'm gonna get out. Or, excuse me, if you don't use stop loss, go say, okay, if I go down to this price, I'm going to average down, making sure I could, whenever this thing starts going back up, I could make money. So it's really up to you to come up with your own stuff, and then once you have it set up, right, then it's gonna become second nature. Once you have you'll already know. But yes, you do have to know how much you want to invest. You do have to know your stop loss, how much you're willing to lose. You do have to know where you want to enter a trade, where you want to ace the trade, etc. You do have to know these things, because you don't want to gamble and just go in and just go out. You know what I mean?
Yes, I understand what you're saying, but I watched some videos from some other traders where they put the stop loss as soon as they get in
the trade,
and at the same time too, they can just put the percentage they want to get on that as soon as they get on the position.
Yes, you can do that. As soon as you get in the position, okay, if you put 250, you say, okay, if I'm about 250, I'm gonna put my stop loss. If you hit, let's say I'm entering the trade, the token I'm entering costs $1, and then okay, if it goes to, I'm gonna put my stop loss. If you go to 80 cents, I'm going to cut my loss. I'm willing to cut my loss if you go to 80 cents. And you also can take profit. You put $100. It's okay if you buy that $1. You say, okay, if you go to $1.40, I'll take my loss. You know what I mean?
Okay.
I mean, I'm saying now I'll take my loss. I'll take profit.
But profit. For me, I think if I put like 10% loss and 30% profit, do you think that's reasonable? Do you think I give the stock or the future room to move like with 10%?
It depends. It depends on your leverage, because sometimes you could enter a trade, and then if you have a high leverage, as soon as you enter the trade, you're already down 10%. Right? So sometimes you have to. Usually, I don't take stop loss up until if I'm down. It will based on the chart that I'm looking at, and sometimes if I'm not looking at the chart, I'll take a 40% loss if I'm down 40% on the trade, maximum. But sometimes I will take it less.
Or maximum down 40%.
Yeah, that's for me. That's for me. But
that's reasonable.
Yeah, everybody have their own. If I'm down 40% maximum, if I see nothing else I can do after I'm losing 40, I'm getting out.
Okay.
But usually, if I really want to cut my loss by like 25, 30%, I cut my loss.
Okay.
Okay.
Thank you.
No problem. Let's take iPhone.
Yeah. Hello?
Yes.
Yes, sir. Appreciate the presentation. I have a couple questions. So for someone like me that's a beginner that's never done this before, this is everything is very foreign to me. First question, are you going to go through the process as far as like, this is how you add money and this is how you do like the very basic stuff? And I guess the second question is, how much do you suggest a beginner, like as far as someone that's in the very beginning stage to start with?
Yes, we're going to, there's a class, there's a KuCoin class for those of you who's KuCoin. There's a KuCoin class, there's a Binance class coming. But have you watched the previous videos, the previous classes? If you watch,
yes,
yes, If you
I
watch
have, yes, sir.
classes, it's like the same process. Nothing changes. It's the same process.
Okay.
To add money from one exchange to another. You just take the contract address from your, deposit exchange, and you go to your other exchange with the money. You just send the money, or you could just buy with your debit or credit card. Especially on KuCoin, you should be able to buy with your debit card. If not, then you buy, USDT somewhere in another exchange, like on crypto.com or Coinbase or something, and then you set it to KuCoin or Binance or anything of that nature. So most of your trades, you'll be doing them in USDT. Okay, USDT is what you will be using to do your trades. Now, as far as how much you need to trade, there's not really no amount. You could start with $100 if you want. Okay, you could start with $100 if you want. So one thing that I will ask you guys, if while you're taking this class, I will at least want you to have at least $50. I would say $25 on your account, even if you minimum. So when we're doing the trading, so you could start doing practice, because you will be doing a lot of practice when we get to the actual trading part, when we get to the actual reading the chart and doing the trading and stuff like that. But when it comes to, it doesn't really matter how much you want, you can start with. I usually suggest minimum $1,000, but if you have less than 1,000, that's fine. But there's no really set amount, because you could start with 50. It just, you won't make much money. You know what I mean? Because per my spreadsheet, you could start with $1,000 and make $1 million in a year. If you can win every day and make 2% of your total account per day, you could make $1 million in a year. It's possible. Any other questions, guy? Okay, go ahead, iPhone.
Yeah, you said spreadsheets. There's a spreadsheet that you have or something like that. I'm not aware of any spreadsheet.
Yeah, I have it. I will show it to you guys. I'm sorry, I'm gonna share the screen with you right now, guys, so you can see. I would. It's a spreadsheet that I created. It's like a challenge.
Do we have access to that? Or?
Yes, I could. Yeah, I'll show you guys. Yes, you could have access to it. I'll post it in the.
Okay.
If you're not on the Discord, Boulpik Trading, I'll post it in the university. This is it, right? So this spreadsheet I created. If you start with $1,000, okay, you start with $1,000, and every day you're able to make 2% of your total account for that day. As you can see, if you start with $1,000, your first day, you only need $20. There's no need after you make $20 for you to try to make more, because you don't think $20 is enough. I see people lose their account like this. The first trade, okay, they make $50. Oh, I could make more. They went and put more money in the trade and take another trade. Next thing they lose $400-500, right? So your very first day, you only need to make $20. Your second day, you only need to make $20.40. If we keep going, you see, as you go further, the amount of money you need to make, is growing. For example, on day 45, you only need to make $46. Now your account have only been about double in 45 days. Now, if we keep going, as you can see, let's go to 100 days. You see how much you make in 100 days, right? You already at $6,000 in 100 days. Okay, then now you're at $6,000, right? Then you need to make $139, okay, on that day, for you. So now you're at 7,000. Then you need to make this amount and so forth. So altogether, right, in 365 days, assuming you trade every day, and every time you trade, you meet your goal, you only need you will make about $1.3 million. Is it possible? Yes. Will it be feasible? Possibly not, because you will miss a couple of days. And then you will lose some days, so you will lose, or you might get liquidated. For example, before the market crash, I started an account with $10,000. This account was, in about 60 days, this account was $100,000, right? And then I lost $40,000 of that, because you have to always prepare for those days that you will lose, right? So I'm, turned 10,000 to 100 in 2 months, and overnight I lost $40,000. Again, which was a mistake in my part. There's no way I have an account with $100,000 only, and then I have $40,000 worth of trade pending. That should never happen. I should not have no more than $25,000 on, like, in trades for that day, right? So this is where risk management come through. As I use my risk management and not putting $40,000, so there's a rule to this, to the risk management, right? We will have a risk management class for you guys. If you have, so the way I do my risk management, from 0 up to $25,000, I enter every trade with no more than 25%. From 26,000 all the way to 50,000, I enter my trade with no more than 30%. I'm sorry, with no more than 15%. Anything over that, I enter my account with only 10%. So with $100,000, I should be entering a trade with only $10,000. But I had $40,000 in trades that day, because thinking I was gonna make big money. I let get over my head, and next thing I know, crypto crash. I was long on all those positions, and I ended up losing $40,000 overnight. It could have been better. I could have only lost $10,000, but I did not practice risk management. I lost $40,000 overnight, right? So it's possible that you're gonna get greedy, but you gotta fight it. Try not to get greedy. So this is what the spreadsheet look like, right? So every time you make a trade, you come updated. As the day come by, you put on. Also, you gotta take some loss. For example, the very first day, if you make, let's say you lose, you lose $50, you gotta put -50. You lose $50 for that day. Then the following day, then you only have $950 to trade. So you only need to make 2% of that $950, which is only $19. Does that make sense?